Hi, everyone, and welcome to another edition of Talking Sense right here on Yachting International Radio with Alasdair Milroy of Breaking the Mould Accounting. How are you?
I'm good, Ria. Back in the UK for a short visit and just getting used to the cooler weather.
Yeah, what's it like there right now?
It's been bright today. Feels like spring is on its way, but it's still, quite chilly like the rest of Europe, I think.
Yeah, I think this has been an extended period of cold for a lot of us. It's time for that season to change and let's get on with some warmer weather, I think.
Yeah, it's nice when the sun comes out. We had a little bit of that today and you can feel it. It's spring is trying to get through and put winter to bed.
Yeah, well, I won't be unhappy to see winter go away. Mind you, I'm Canadian. I shouldn't be saying that. I'm used to like 10 months of winter. I don't know. I just don't like it. I don't like it. But today we are going to be talking about setting up a company, because with Crew, one of the things that I've noticed probably in the last 10 years is that more and more crew are getting into the industry. They're becoming, if they don't have the ultimate goal of becoming a captain, but they want to sort of build up a nest egg, a lot of them have a side hustle. And that side hustle is sort of their plan when they come on shore. A lot more women than men, for sure, because unless, as I said, they want to become a captain, or some of these women, they want to come on shore and they want to have children, they want to have families, etc. There's a side hustle going on. How does that work with, being crew, having to set up a company, the tax structure? Can you take us through a little bit of that?
Yeah, I can try, I guess. Let's first look at what a company is. And a company firstly has its own distinct legal personality, so it is able to sign contracts as the company, and it is distinct from the individuals behind it. So one of the key things a company does is, if it's a limited company, is limit your liability of shareholders to the capital that they've put in. And so it gives some protection and separation from your individual personal assets and the corporate entity assets. So normally companies will then operate under, every country has a company law, and that will govern a lot of how companies are run and what needs to happen and what duties the directors of that company have. So a company will always have shareholders, who are the people who are putting the capital into the company to start it up. Obviously, for something like a crew, would probably be the same people as who are going to be the directors. So they can be the same. And then you have the directors who are responsible for the day-to-day running and the operation of that company. Will take the decisions for the business, sign the contracts on behalf of the company, etc. So I think probably one of the first things to think about when setting up is where to set the company up.
There's a lot of crew that it's a sole proprietorship, basically, because they're not setting up this huge, it's not getting to that stage of being huge. It's just, maybe they're bringing in 10 grand a year to start, the first year, because they are crewing, which we know is, especially if you're on a charter yacht, it's 24 hours a day, 7 days a week. So they don't have a lot of time to push it, but they are sort of, how does that work? And yes, I mean, it does come down to, if they're crew and they're South African, but yet they are based in the Mediterranean on a boat, where do they file their taxes? Where do they set up that company?
So I think there's an important thing there that actually, if you're just starting up and you maybe don't need all that extra complication of having a company, there's nothing wrong with trading in your own name. Okay. So trading as a sole trader and setting up a business in your own name, and then you can potentially look at incorporating and putting the company structure in place. Because you've got to remember, normally depending on where the company is, you're going to have to act as a director. You're going to have to prepare minutes for decisions of that company. You're going to potentially have to do shareholders meetings for certain actions. You've got to prepare accounts, file a company tax return. So it does get a bit more complicated than just having a sole trader. And I think then you've got to look at where is your business going to operate from, and where is it going to trade? Because particularly with the UK has been a very popular place to establish companies in the past. It's fairly simple to do, to incorporate a company in the UK, but probably got a little bit more complicated now with Brexit, and in terms of if you are trading in the EU, a UK company is not going to be an EU entity, so you might have more difficulties if you've got to register for VAT in the future. Yes, there's other things to think about with that.
Well, does it come down to, like, I'm Canadian, for example, so would my company be based in Canada, or do I have a choice of where to base my company?
Yeah, sure. You can, a lot of companies, or a lot of countries, sorry, you can incorporate a company. So with, if you're an Australian seafarer, or like me, you could choose to incorporate a company in Australia or Canada. But if you're going to be trading, if you're selling and bringing physical goods into, say, the EU, you might be better with a company which is EU based, to be able to comply with some of those regulations, depending on what you're selling. If it's software or more of a services, that might be less important than if you're actually trading goods.
Well, that's the thing too, is that a lot of people, it's courses, right? They're doing courses online. So how does that differ then if you're actually trading with products and sending products, or you are, like a lot of people nowadays, a digital nomad?
Some electronic gets quite common. There is certain rules around telecommunication and services, which is training, etc. Can be, and where they're being provided from. So I would suggest that, depending on what you're doing, it is worth talking to a professional, either you're an accountant or a lawyer, to assist with what structure is right for you at the start of your business. In terms of incorporating, if you're going to set up a company, which is called incorporating a company, normally a company has there'll be a process to go through, and you'll normally have what they call your articles of association of that company, which is the rules that govern how the company should be run. Definitely in terms of looking at what business you've got, it's worth considering whether to just have a standard articles of association, or whether you need to have something specific for the type of your business that you're setting up. And that's something an accountant or a lawyer can definitely assist with. Also, there's some jurisdictions which are very popular with yacht owners. For instance, obviously you see the Crown dependency, other islands like Cayman, BVI, Guernsey, Jersey are options, but they have quite a lot of restrictions around who can set up a company. And for instance, you have to have a registered agent in those countries. You often have to look at having a director in those jurisdictions. That all adds to the cost. So for a yacht owner wanting to set up, it makes sense, because there's potentially ring fencing the liabilities around the yacht and the asset protection, as well as some obviously tax planning around VAT, etc., for holding the yacht. But that might be quite expensive for a crew member, starting out in business, or even if you're only turning over 50 to 100,000 a year. Those costs can sort of probably run 5,000–10,000 euros a year type.
Now, are there different companies that have a threshold? For example, I know in Canada, if you are operating as a sole proprietor, there's a certain threshold before you actually have to register that company. Does that apply to other countries as well, or just a few, or am I on?
No, certainly, I think you're talking about the thresholds normally apply to your goods and services taxes or VAT registration. So, yeah, most countries will have a level of turnover after which you must register for VAT. So before that, you can choose whether it's better for you, advantageous to register or not. Obviously, if you're registering, you've got to charge VAT on your sales or on your products, but you also get to claim the VAT on that you pay on your inputs against that. If you're not registered for VAT, you can't claim those inputs. So yeah, you need to look at what the activity is going to be and the levels and make a decision, which an accountant can help with to look at when's the right time to register for VAT. Because again, it's another complication in terms of administration, having something regular to have to return to deadlines, which are fairly strict. If you don't get that right, you're likely to get potentially investigations open up on your from the tax authorities. So yeah, that's definitely an important consideration.
Well, let me ask you then, because
excuse me,
especially if you are, say, a crew member, you're making under 50,000 a year in your company, you're also a crew member, and you are a sole proprietor. How does that work via taxes then? Because you're getting paid from the yacht, and I'm assuming you're getting paid under your local, whichever country that you live in. For me, it would be a social insurance number. But then your business also, are those lumps, is that money placed together as one income, or is there a possibility of separating that out without incorporating your business?
Normally, if you're not incorporated, you'd have to declare your employment income in one part of your tax return, and then your other business would be in a separate time. And
okay,
again, when you've got that other business, you can actually claim some of the expenses and costs that you might have. So if you've got, if you're using an area of your flat or house for as a home office, you could potentially claim some of your power bills and that area of rent or interest on your mortgage for against the business. You've got to be quite delineated, in terms of keeping those records for that, because you need to keep that. Things like your stationery, obviously, and the other business expenses would go on your individual return. If you're a company, then you're effectively then going to have your individual tax return, and then your corporate company will have a separate tax registration, a separate return. That's where you have to keep your accounts for that company. And yeah, as we've spoken about before, having an accountant there's a cost to that, but actually you could save yourself much more than the cost of the accountant's fees by getting that right.
You also save yourself a lot of headache and stress and a loss of sleep. I mean, it just seems so complicated sometimes, because most of us, we have certain strengths that we're good at, and we tend to gravitate towards those strengths. And if we start up a business, it's something that we're strong in. And I mean, accounting, you're not going into business because you're accountant, so it does become quite complicated just from the sounds of the things that we're talking about today.
Yeah, I think it is, and it's important with a company. You have, as a director, you have responsibilities that you take on when you become a director of a company, and some of those are around making sure that company's got good records and good accounting records. These are things that are in the law, the company law in most countries, as well as then your tax records. So there is a responsibility there as a director that you need to be aware of, and having some professional input into can help.
Well, I don't know. I know myself. I have, we have talked about that before. I do have an accountant, and I send all my books to him because I don't know. I have software that I enter everything into on my computer, but I still have no idea how to, deal with the ins and outs of actually filing my tax returns. It's difficult.
Yeah, and I talk to a lot of accountants on a sort of day-to-day, week-to-week basis, and that you consistently hear of people who, have new clients come to them who have been doing their taxes on a do-it-yourself basis for 10, 15 years, and actually have lost thousands in when I say lost, they've paid much more tax than they would have needed to, because they haven't been aware of all the things they could claim. So I think you can definitely pay to spend that money on the fees to get those things set up. And I think a lot of crew with the types of businesses are probably e-commerce these days is quite popular. And even that, the administration of keeping the records, if you've got an electronic platform, an e-commerce platform set up, having someone who can help with that and get that set up is definitely going to be worthwhile and probably save you a lot of money in the long run.
Well, let me add, you said something interesting. A lot of people, have done their taxes for 10 or 15 years on their own. Can you ever go back? Because I know that governments can go back and say, and ding you, for years that maybe you underpaid taxes. Is it possible for an individual to go back and say, you know what, I in fact have more to claim? Or does it work that way?
I think this. I'd need to look at this in individual country laws, but you could probably go back and amend a couple of years' returns generally. But I think if it goes, 6, 7, 8 years back, then I think it's going to be difficult or be quite costly. And the other side of that is if you've claimed too much, you could end up with tax that you have to pay that you haven't paid, and in that case, the tax man will look at not just the taxes, but there'll also be interest and potentially penalties on those. So, I think and most of these software firms will all say, look, businesses can help you with setting up, and I think there's some truth in terms of the doing the day-to-day accounting. You can do by yourself, but actually when it comes to filing the tax returns and even getting that set up right, if you really want to do it properly, getting some professional input into that's going to be well worthwhile. And you can then go and do a lot of it yourself, but you've had the right structure put in place.
Right. Well, if you're anything like me, pretty much that entire conversation just said to me, keep it with your accountant, because I wouldn't know where to begin. I mean, it's complicated, and I mean, I only do what I do at Yachting International Radio. So I can't imagine, doing Yachting International Radio and then as well crewing on board, because then you've got, two sort of separate things entirely that you're doing. And and it's claiming taxes for both, it would be difficult, I'm sure.
Yeah, I think you're right. If you're working and then because we know that being a crew on a yacht is when you're there, you've got to be there full time. So then trying to find that time in the evenings or late to maybe catch up on business, or in that case you might have someone who can assist who's at home, or once you're set up, potentially you have someone like a virtual assistant who can run some of those things for you, and you can delegate some of those tasks. But it's definitely between running your books and sales and marketing and all the things that come with owning or running a business is it's a lot on your plate. It's a full-time role. And I think the other thing, of course, is a lot of crew don't live necessarily where their home country is, but actually where do you incorporate? Just because you incorporate in the UK, if you're spending all your time in France, then, and that's where the decisions are made, that could make the UK company resident in France. So you've got to take care around how you manage that and where that company needs to file its returns. Just because it's incorporated in one place,
Sorry, but the other thing too is that with some countries, whatever income you have, even if you are a resident in another country, your home country still demands that you pay taxes to them.
Yeah, absolutely. Most countries, I mean, the US is probably fairly well known as citizens pay tax on their worldwide income. Countries like Australia have both a residence rule and a domicile rule. So you might say you're non-resident as an Australian, but actually if you've kept your links, your domicile, if it's where you grew up and it's where you've kept a house and it's where your bank accounts are, then you might be able to say, well, I don't hit the residency test, but if your domicile test still catches you, you would still pay tax in Australia. So yeah, there's some, you can't just assume because you're not in that country that you no longer pay tax. Obviously, countries like the UK have a seafarer's exemption. Again, that's not automatic. So for seafarers, it's not just I'm out of the country, therefore I'm a seafarer, I don't pay. You have to actually file that seafarer's exemption to and comply with the time out of the country over the number of years, and just watch that you're not then becoming resident again and needing to file tax returns.
Okay, so for everybody out there, just contact an accountant because it's complicated. And every year, and you know, I've followed this probably for the last 15 years online. And every year it seems like something is changing, or there's a new tax law coming into place. And governments are famous for, you know, we're going to up this tax here and up this tax here and up this tax here. And they sneak in a few cheeky little changes that you haven't noticed. And, you know, it's a full-time job keeping track of what exactly the expectations are from the governments of either where you're working or your home country.
Yeah, it's hard enough if you're living in and working in, you know, lived in one place or, you know, for a long time. But if you're either moving around or live in a different place than your home country, then it becomes more complicated again. And particularly, I think with Brexit, because the UK, I think, as I said at the start, has always been a very popular place to set up companies. English law is very familiar to many parts of the world. It's, you know, it's the law that governs a lot of our contract and corporate business worldwide. But just simply, you know, setting up a company in the UK might not be the best if your business is going to be set up in the EU, for instance. Particularly with Brexit and the change in your VAT and yeah, those are things that could add more complication in terms of where you work. And of course, you need a registered office for a company as well. So every company must have a registered office, which in places like the UK, accountants can do. In some countries, such as, you know, again, the crown dependencies of, you know, Guernsey and Jersey, even Malta, you have to, if you're not resident there, you have to have someone who's a registered agent who has to collect information on who the owners are and then provide the registered office and provide some oversight to that company, which can add a cost to it.
Well, it's smart to have somebody overlooking all of the books, guaranteed, because you know, I wouldn't know where to start or end or anything in between. But I would suggest that anybody, if you have any questions after this conversation, to get a hold of Alasdair, because it is definitely a complicated issue. And of course, you know, certain countries right now are, you know, you've got maybe another month or two to file your taxes for this for 2021.
Yeah, I think the UK has already passed. We're into the 2023 year. Next week, I think UK's always had a 6th of April end of tax year, so but actually corporate tax returns were due in January. Countries like Australia, it's middle of the year, June. So again, financial years change. You've got to decide on when your financial year is going to be for your, if you set up a company. You can normally choose that as part of setting up your company and preparing your articles of association, or there'll be a default depending on which country you're in. But yeah, some planning can probably save some heartache in the run. And a lot of businesses, you know, do find, you know, they might be going along, think I'm making a profit, and then they haven't put the cash aside for their taxes, and when that comes, it can, you know, either whether it's a VAT return, tax, or income tax. It's one of those things that can catch a lot of young businesses out and cause them cash flow problems. And you know, we know that, you know, many businesses fail in the first first 2 years, but you know, I think it's 1 in 10 or less will last to 10 years. So, and I think that's a lot of people just, you know, not having that business experience of what needs to be done and planning ahead.
Yeah. Well, planning ahead is always the key, isn't it? Alasdair, I want to say thank you again for your insight. And to everybody out there, please do feel free to email Alasdair. We'll provide his information below this interview. If you have any questions in regards to taxes or a topic that you think would be an interesting one to discuss in future episodes. Thank you, Alasdair.
Yeah, I'd love to have the questions. So I look forward to anyone getting in contact and talking during the week.
Nice. You've been watching another episode of Talking Sense with Alasdair Milroy from Breaking the Mold Accounting. My name is Riel. I have been your host. We'll see you again next time.